1 hour and 4 hours trader is an trading system trend momentum based on the indicators of the trend and the indicators of momentum. Time frame 15 minutes, 30 minutes, H1 and H4. Best time frame 1 hour and 4 hours. Currency pairs: Euro to US dollar, Pound sterling to US dollar, Australian dollar to US dollar to Swiss franc, Pound sterling to Japanese yen, Euro to Japanese yen, Australian dollar to Japanese yen, NZ/USD. Metals: gold and silver. Metaritor indicators: non-lag. 0, 20, the groovy spot, bid and ask price. Chaotic indicator: 16, 4.6, 2.5. AMA bands: 9, 30, 2. Stochastic RSI with trend wave: 10, 21. Super trend indicator: 20. Rules for 1 hour and 4 hours trader. This is a framework template. The trading with this template is discretionary. Options: trade in direction of the trend. Trade with 3 indicators in the same direction. Trading in multi-time frame. Define the trend on the 4-hour chart. After go on the 60 minutes chart. Trade in the direction of the trend of the 4H. Exit positions: options: 1, at the opposite arrow. 2, non-lag. Changes color. 3, chaotic indicator changes directions. Initial stop loss at the previous swing. Typically, people who email me about the intraday time frames want to know if I ever trade solely off of these lower time frames. The answer is, yes, I sometimes do trade the 1 hour or 4 hour charts on their own without taking into account the daily or weekly time frame. However, 90% of the time I use the 1 hour and 4 hour charts to confirm the higher time frame signal, mainly the daily chart time frame. In this way, the intraday charts work as an extra point of confluence to give weight to a trade and further confirm whether or not I want to enter it. The other big advantage of the intraday charts is that they can allow me to fine-tune my entry to achieve better risk management. More on these topics later. The most important thing to remember is that I never go lower than the 1 hour chart because from my experience, any time frame under the 1 hour is just noise. As you go lower in time frame, there are increasing amounts of meaningless price bars that you have to sift through, and this makes the story of the market cloudier and cloudier, until you reach a 1-minute chart where you are basically just trying to make sense of gibberish. I only look at the 1 hour and 4 hour charts when I'm looking at intraday time frames. The anchor chart that I base most of my trading decisions on is always the daily chart time frame. For those who like to look at weekly charts, the concepts in this lesson could be applied there as well. You would essentially use the daily charts to confirm weekly signals and add confluence to them, as well as fine-tune your risk management. It should be noted, I rarely trade off weekly charts alone, but for the diehard weekly chart traders, keep this in mind when reading the rest of this tutorial. Remember, it is not essential to trade the daily chart with confirmation from the intraday. It's just something you might want to implement as you become more advanced and have mastered the basics of trading daily chart time frames. Remember, this is not day trading. The length of time we are holding these trades is still intended to be a full overnight position or multiple days, weeks. Remember, the initial trade trigger is still the higher time frame chart. Using intraday charts for second chance trade entries. Everyone hates missing out on a perfectly good trade, myself included. Luckily, there are a number of different ways you can get a good second chance trade entry on a signal you initially missed. One of those ways is by use of the 1 hour or 4 hour charts to look for a signal a few hours or even days later, to re-enter in the direction of the original daily chart signal that you missed. In the example below, we see a clear as day pin bar buy signal from support in the S&P 500, circled in the chart below. If you missed this one, you were definitely kicking yourself. Using intraday charts to confirm daily signals. Sometimes, you may see a potential daily chart signal but you don't feel convinced. It may not look right to you and you feel it needs some more confirmation as a result. This is normal, and it happens often. You will sometimes then get a 1 hour or 4 hour chart showing a super convincing signal after the daily one you weren't sure about. Notice, in the chart below, we had a bullish tailed bar at support in an uptrending market. But at the time that bar formed, you would probably be wondering if it was really worth taking or not, due to its bearish close and the preceding swing lower. Using intraday charts to tweak your risk reward and position size. As we know, the daily chart requires us to use wider stops most of the time, unless we use the 50% tweak entry as exception. So in most cases, when we use the 1 or 4 hour intraday chart, we can implement a tighter stop loss and adjust position size accordingly. This allows us to substantially improve our risk reward because the stop loss distance is reduced and the position size can be increased as a result, but the profit target remains the same. This is not going to be the case on every trade on intraday charts. Sometimes the risk management ends up being very similar to what it would have been on the daily chart on its own. But there are many instances where it works out to where you can double or triple the potential reward on a trade by utilizing intraday signals. In the Dow Jones daily chart example below, we can see a clear pin bar signal formed, and if you had entered near the pin high with the classic stop placement of the pin low, you'd likely get a 2R reward, possibly 2.5 or 3R at the most. 1 hour and 4 hours trader is in trading system trend momentum based on the